Good afternoon, good evening from for traders. This is Robert from the office, and today we are going to cover a topic called momentum trading. And I believe some of the traders know about trends, and they know that you can take advantage of the trend. Question is, how long can you take advantage of that trend? So today I'll be covering that, and hopefully we'll be able to handle this topic with you traders. So this is my presentation. So as you can see, welcome to FXPesa traders. Basically, we are a non-dealing broker, and what we offer you guys is to be able to trade using our platform. So back to the momentum trading. So as a trader, you really need to look at areas in the charts where you can take advantage of. So whenever you have a chart, make sure that you're looking at maybe possibilities of, getting in, getting out. And so momentum trading is one of the ways that you look at whenever you're trading. So let's look at an intro. What is momentum trading? It is the buying or selling of an asset as per the current trend. The assumption is that the current trend will continue, thus a trader can enter trade. For example, if the trend is bullish, then the assumption is that the trend will continue going up. And if the trend is bearish, then the trend will continue going down. So as you can see here, there's the assumption that the trend will always be going up, right? So at whatever point in time you enter, then maybe you'll go in. A case scenario will probably be what happened to cryptos, basically also Bitcoin. We saw guys who thought Bitcoin will continue going up, especially during that bull run to the 60K thereabouts. And so some people got in at that point in time. And we all know that a trend will get to a point and, the bears, if it's bullish, the bears will want to come in. So in this case, we have a scenario where the bearish trend came in, and all of a sudden, we know some traders who really had a hit on their accounts, especially those who probably didn't want to use risk parameters. Here you're talking about stop loss orders. And so basically momentum trading is something, it's not for everyone, right? So in momentum trading, traders depend on technical indicators to take trades, e.g. a moving average to determine the trend, and also buy or sell entry signal. So here, majority of the momentum traders will probably depend on a moving average oscillators. Maybe they want to look at the trend, and here you see that combination. It could be working for them because we all know indicators are really useful in terms of trades. For example, we know moving averages. We have the SMA, the simple moving averages, and the exponential moving averages. So moving averages act as dynamic support and resistance. And then here you're talking about dynamic, means it's moving. So they are not static, right? Unlike zones, maybe based on a trend line, or maybe if you're looking at yesterday's high, yesterday's low, monthly lows, the highs. So moving averages will always be moving because they try to replicate price movements on the chart. We also have moving averages that also offer entry and signals. Here you're looking at opportunities to buy. Moving average will give you a reason as to why you buy, right? If there's a cross maybe and price is, below the moving average, then you can take that as a sell signal. So these are opportunities that you can look at, basically you're looking at your charts. Moving averages can also give market direction. If you look at moving averages, they tend to have, some will be facing upwards, so this is how now a moving average may tend to give you market direction. But I think this is something that we as traders, we really need to focus on and make sure that you understand that depending on a moving average by itself, it's quite risky. So let's go to the charts. Let's have a look at examples on how you can take advantage of a trend, especially a bullish trend or a bearish trend, to make trade.